VA loans. Did you know that if you are a veteran or active military, you may qualify for a loan with no down payment and no mortgage insurance? I mean, that's a lot of potential savings every month. So we're gonna head over to Summit Funding and we're gonna learn a little bit more about it. All right, we made it. I'm here at Summit Funding and I'm gonna talk with Aaron Denton about VA loans. So we're gonna get it set up and then we'll go. All right, so what can you tell us about VA loans? Why would somebody want one? How do they qualify for one?
Yeah, absolutely. So I would say the number one thing about VA loans is they're probably one of the most misunderstood loan products out there. Why I say that, we have a lot of clients who come in who are eligible for a VA loan who had no idea that they were. Kind of the misconception is that you had to have served like a long career in the military or have reached a certain rank, when reality is that you really just have to have served in the military. Even as a reservist, you would be eligible for VA benefits. So what makes a VA loan a great loan? Well, I can tell you it is by far, I would say it's the best loan product that's out there for a multitude of reasons. There are unique situations where another product might be better, but majority of situations, VA loan is going to be the best product out there. Reason number one, there's zero down payment requirement. I can tell you the majority of the clients that we meet with, they feel the biggest challenge or why they haven't become a homeowner up until now is they thought they had to have this big giant chunk of money for a down payment. One of the biggest benefits of a VA loan is there is no down payment requirement. You compare that to renting an apartment or renting a house, you could be looking at $2,000 or $3,000 by the time you pay first month's rent, last month's rent, security deposit. You could be $2,000 or $3,000. Somebody's eligible for a VA loan. It happens every month. We hand somebody keys to a house, and they literally didn't even bring $1 to the closing table. So that's a huge benefit of a VA loan, is you don't have to have a big chunk of money. You don't have to have a down payment. The second biggest benefit of a VA loan, it's a government insured loan. One thing that most clients don't understand is interest rate is determined by risk. The higher the risk, the higher the rate. One of the beauties of a VA loan is the Veterans Administration insures that loan, or they actually insure the bank who gives the veteran to the loan. When we have that insurance policy in place as a bank, it really minimizes the risk for lending money. And that's probably another very common misconception, is that you have to have really good credit or even above average credit to get a VA loan, when in actuality, VA loan's the only loan product that doesn't even have a minimum score. There isn't a score requirement for a VA loan. So we've had many clients with credit in the low 500s. I think we even had a client in the high 400s that we were able to get approved for a VA loan. So because it's insured and backed by the Veterans Administration, it's a very easy loan to qualify. And again, all you have to have is the eligibility of serving in the military. In addition to being easy to qualify, again, interest rates determined by risk. When it's a government insured loan, it's a minimal risk for us. So even somebody who doesn't have great credit, who qualifies for a VA loan, they're probably going to get an interest rate pretty close to what somebody who has excellent credit putting 20% down on a conventional loan. So again, big benefit of, not only is it very easy to qualify, but you're also going to get a great interest rate even if you don't have the greatest credit. So that's a huge benefit of it. Probably the third biggest benefit for a VA loan, for people who've heard of PMI before. So basically PMI is an insurance policy that you pay for that protects the bank. Now most people are like, well, wait a minute, why would I want to pay for insurance that protects somebody else? Again, rates determined by risk. When that insurance policy is in place, it lowers the risk on the loan and therefore allows you to get a lower interest rate. That's one of the beauties of a VA loan, is the insurance is there, but with VA, it's not the consumer, it's not the person taking out the loan who pays for it. It's funded through the Veterans Administration. For example, an FHA loan, say an FHA loan for $200,000, you're probably looking at about $160, $170 a month in PMI. So when you apply that to how financing works, kind of a good rule of thumb is every $10,000 you borrow or every $10,000 you buy is about $60 a month. So when you can save $160, $180 a month in PMI, it allows you to go out and buy a home $30,000 more expensive than if you were using an FHA loan and still keep the same payment. So that's a big benefit through VAs. You don't have that monthly mortgage insurance. Just allows you to go out and afford more home and have more buying power.
Now, VA loans can be complicated. So if you find that you're having more questions, feel free to reach out via the comments, or you can send me a message directly, and I'll make sure we get that answered for you. So thanks for watching, guys. I'll catch you in the next one.